Hi, we've been having some streaming problems this morning. I'm sorry if you've had to wait. It's Wednesday, and this is the breakdown. A 15-page intelligence report yesterday reveals that Vladimir Putin was personally behind election manipulation this past year. What this means is further U.S. sanctions on Russia as early as next week, while tomorrow U.S. officials will be meeting their China counterparts after Foreign Secretary Blinken yesterday told a Tokyo audience he would be pushing back against Chinese aggression and coercion. Ahead of the meeting, the U.S. has blacklisted 24 more Chinese officials over their part in the shunting of the Hong Kong Autonomy Agreement from 1984. The total of blacklisted individuals now is at 34. U.S. indices ended down yesterday after the 10-year bond continued bloating at an average yield of 1.62%, and the inflation-protected 20-year increased from 1.9 to 2.3%. The Russell seems unimpressed by Congress's approval yesterday of the Business Paycheck Act extension for SMEs nationwide. The dollar remains steady ahead of tonight's FOMC meeting results. Analysts are expecting Fed Head Powell to mention the disorderly bond market, but he won't be tightening policies just yet due to labor pressures. Yesterday's data shows retail sales in February contracting by 3% month on month. Export prices fell at 1.6% and import 1.3%. Industrial production also crashed by 2.2% and manufacturing by 3%, while the housing market index for March is down 2 points to 982. As we can see, the dollar index and its moving average have converged upon the week's central pivot, and volumes remain high. What that means is a potentially volatile reaction to tomorrow's meet. Nobody's priced in anything yet, and perhaps this afternoon's mortgage and building data will prod us a little. Basically, targeting the S and R2s if the ones are breached is a pretty certain bet. Also ahead today, consumer inflation from Canada. European indices ended in the green, the FTSE up 0.8%, the DAX 2.2% on upbeat earnings from Volkswagen. The euro is edging up after consumer inflation in Italy and France fell somewhat, but economic sentiment in Germany and the Eurozone soared to 76.6 and 74 points from March respectively. ECB member Philip Lane yesterday hinted that the bank may take the final step into negative rates if needed. Meanwhile, the pound is gaining despite banker Bailey's prediction that the UK's GDP this first quarter would decline by 4% on the year. The EU and Britain finalized their fishing quota deals yesterday, finally, after the UK decided to allow Norwegian boats to continue fishing in its territorial waters. Later this morning, consumer inflation for the zone. Asian indices are falling this morning, except the Shenzhen Composite, which seems to be thriving on a 1.2% rise, and the yen keeps edging down despite a 217 billion yen trade surplus February, much less than the expected 422. Exports to China were up 3.4%, but imports soared by 114%. Ahead of the FOMC and with the family jewels deep in the stomach, this morning finds the VIX up a concerning 21%. That's the Chicago Option Exchange's volatility index, and it basically means look out for some volatility on the S&P. Oil is back on the upswing after the API reported a 1 million barrel drawdown. This afternoon, we'll be seeing if the EIA confirms that. Basically, we're looking at downward pressure on Brent as another wave of lockdowns threaten Europe, and some backwind to WTI thanks to relieving COVID pressure. We can see that clear sign of optimism after yesterday's API report pushed us above the two-day triangle, but we're not out of the woods yet in the longer formation despite a markedly positive RSI. Also, Gazprom and Shell have signed a 5-year strategic agreement covering marketing research and environmental matters, and that's bound to help matters. After a U.S. federal judge suspended Donald Trump's blacklisting of Chinese phone manufacturer Xiaomi, this past week, more Chinese companies are reportedly planning a similar application. Over 43 of them have been hit by the sanctions so far. Closer to the NASDAQ, more states are joining Texas's lawsuit against Google on antitrust matters. And Volkswagen, as said, yesterday released a 2.1% increase in quarterly revenues year on year to 67.4 billion euros. That's extending the yearly performance to a 12% drop compared to 2019. Still ahead, Nike will be reporting tomorrow alongside FedEx and Weibo, so the season still has some pepper left in the canister. We'll see you tomorrow.